Budget highlights 2019. Key economic indicators. Indian economy estimated to achieve growth of 7.2% in 2018-19. As compared to 6.7% recorded in 2017-18. Today, India is the sixth largest economy of the world. Consumer Price Inflation Index has significantly moderated from 9.9% in 2012 to 13 to 3.6% in 2017 to 18. Fiscal deficit has reduced to 3.4% in 2018 to 19 and the current account deficit is likely to be only 2.5% of GDP this year. Foreign direct investment during the last 5 years was about $239 billion. India has improved its ranking in the Ease of Doing Business Index by 23 positions and is currently ranked at 77th position as per the World Bank Ease of Doing Business 2019 report. Direct tax. The tax collections increased significantly from rupees 6.38 lakh crore in 2013 to 14 to almost rupees 12 lakh crore in 2017 to 18. The number of returns filed have increased from 3.79 crore to 6.85 crore, reflecting 80% growth in tax base. In 2017 to 18, 99.54% of the income tax returns were accepted as they were filed. The present government has approved a path-breaking, technology-intensive project to transform the income tax department into a more SSE-friendly one. The government claims that going forward all returns will be processed in 24 hours and refunds shall be issued simultaneously. The government also mentioned that within the next 2 years, almost all verification and assessment of returns selected for scrutiny will be done electronically through anonymized back office, manned by tax experts and officials, without any personal interface between taxpayers and tax officers. Indirect tax. GST. The biggest taxation reform undertaken since independence, 17 different taxes levied by the central and state/UT governments were consolidated into one GST. The average monthly tax collection in the current year is rupees 97,100 crore per month as compared to rupees 89,700 crore per month in the first year. The present government wished to reduce the GST burden on home buyers and accordingly have moved the GST Council to appoint a group of ministers to examine and make recommendations. Customs. Customs Department to pursue to attain fully comprehensive digitization of export/import transactions. Improvement in logistic transaction leveraging RFID technology. A revised system of duty-free importing of capital goods and inputs to manufacture and export has been introduced. Rates of income tax. Corporate tax. No change in rates, corporate tax, and dividend distribution tax. No change in surcharge and health and education cess. Personal tax. No change in slab rates and deduction under Section 80C. Section 87A proposed to be amended to provide relief to the resident individual taxpayers by increasing the amount of tax rebate to rupees 12,500 from existing rupees 2,500. The tax rebate shall now be admissible to taxpayers having total taxable income up to rupees 5 lakh, instead of existing rupees 3,50,000. Standard deduction for salaried employees increased to rupees 50,000 from rupees 40,000. Other direct tax proposals. House property income and affordable housing sector. It is proposed to amend Section 23 to provide relief to the taxpayer by allowing an option to claim nil annual value in respect of any 2 houses being declared as self-occupied property instead of one such house. However, interest deduction under Section 24 shall not exceed the existing limit of rupees 2 lakh for both houses put together. It is further proposed to amend Section 23 to provide that notional rent in respect of unsold inventory, in the form of building or land appurtenant thereto, shall not be charged to tax up to 2 years, instead of existing 1 year. The said period shall be reckoned from the end of the financial year in which the certificate of completion is obtained from the competent authority. It is proposed to amend Section 54 to provide relief to an individual and HUF having capital gains up to Rs 2 crore arising from transfer of a residential house, by allowing the taxpayers a one-time opportunity at his option to utilize the said amount for purchase or construction of 2 residential houses instead of 1 residential house. In order to augment the supply of affordable houses, it is proposed to amend Section 80 EBA by extending the time limit by 1 year to claim the tax holiday benefits, i.e. the housing projects approved before March 31, 2020 shall be eligible for availing the said deduction. TDS. It is proposed to amend Section 194A to ease the burden of compliance by increasing the annual threshold limit to Rs 40,000 from Rs 10,000 for deduction of tax at source on interest income paid by a banking company, cooperative society, or a post office. It is proposed to amend Section 194I to increase the annual threshold limit for deduction of tax at source on rental income from Rs 1,80,000 to Rs 2,40,000. The GST proposals approved by the GST Council on January 10, 2019, relevant notifications are awaited. GST registration. Basic exemption limit for suppliers of goods, being increased from Rs 20 lakhs to Rs 40 lakhs with effect from April 1, 2019. The limit for suppliers of services remain the same at Rs 20 lakhs. Separate registration can be obtained for different places of business within the same state, even in case of single vertical of business. New composition scheme for services providers. In a major relief to MSME sector and small suppliers, supplier of services having annual turnover up to Rs 50 lakhs during FY 2017-18, can join this new composition scheme. The GST rate is proposed at 6%, 3% CGST plus 3% SGST, from the existing 18% GST. GST payment to be made on a quarterly basis and only one GST return to be filed annually. Increase in limit of the existing composition scheme. The limit of composition scheme for suppliers of goods increased from Rs 1 crore to Rs 1.5 crore per annum with effect from April 1, 2019. Tax to be paid quarterly and GST returns to be filed annually. Consensus received for charging calamity cess in Kerala. Kerala has been given an approval to charge disaster/calamity cess of up to 1%, applicable on GST rates of 12%, 18%, and 24%, on all the intrastate supplies of goods and services within Kerala, for up to 2 years. Reverse Charge Mechanism, RCM. No RCM under GST on procurement from URP, unregistered persons, notification January 2019 Central Tax, Rate, January 2019 Integrated Tax, Rate, dated 29.01.2019. The GST Council to decide upon the class of registered persons who shall be liable to pay GST on RCM basis towards supply of goods/services received from unregistered persons. E-Way Bill. Linkage of E-Way Bill with GSTR returns have been introduced and presently the option of import consignment to be captured in the GSTR-1 returns have been started. Linkage of E-Way Bill for interstate and intrastate transaction has been started on a pilot basis, and with this facility, taxpayer will not be required to enter data in his form GSTR-1 for all invoices for which he has generated an E-Way Bill. This will avoid double data entry by taxpayers. This facility will help taxpayers to fill up their form GSTR-1 in less time. This will also avoid any data entry mistakes made while filling details. There being a huge gap of transaction between the GSTR-1 for goods and E-Way bills generated, the government has started to measure and check high-value transaction of E-Way bills generated for interstate and intrastate transactions. Stamp duty. It is proposed to amend levy of stamp duty on securities and debentures as follows. In case of issue/transfer of debentures. In case of issue of debenture, 0.005%. In case of transfer and reissue of debenture, 0.0001%. In case of issue/transfer of any other security. Issue of security other than debenture, 0.005%. Transfer of security other than debenture on delivery basis, 0.015%. Transfer of security other than debenture on non-delivery basis, 0.003%. Derivatives. I. Futures, equity and commodity, 0.002%. 2. Options, equity and commodity, 0.003%. 3. Currency and interest rate derivatives, 0.0001%. 4. Other derivatives, 0.002%. Government securities, 0%. Repo on corporate bonds, 0.00001%. Other aspects. Pradhan Mantri Kisan Samman Nidhi, PM Kisan, launched to provide direct income support of Rs. 6,000 PA to farmer families with cultivable land of up to 2 hectares with annual outlay of Rs 75,000 crore. Government proposes to launch a mega pension yojana, namely Pradhan Mantri Shramyogi Mandan, for the unorganized sector workers with monthly income up to Rs 15,000. This pension yojana shall provide them an assured monthly pension of Rs 3,000 from the age of 60 years on a monthly contribution of a small affordable amount during their working age. An unorganized sector worker joining pension yojana at the age of 29 years will have to contribute only Rs 100 per month till the age of 60 years. A worker joining the pension yojana at 18 years, will have to contribute as little as Rs 55 per month only. The government will deposit equal matching share in the pension account of the worker every month. It is expected that at least 10 crore laborers and workers in the unorganized sector will avail the benefit of Pradhan Mantri Shramyogi Mandan within the next 5 years, making it one of the largest pension schemes in the world. Government has undertaken many effective steps to strengthen the MSME sector, which provides employment to crores of people. Recently, a scheme of sanctioning loans up to Rs 1 crore in 59 minutes has been launched. GST-registered SME units will get 2% interest rebate on incremental loan of Rs 1 crore. The requirement of sourcing from SMEs by government enterprises has been increased to 25%. Of this, material to the extent of at least 3% will be sourced from women-owned SMEs.